All right, good morning, traders, and welcome to this live intraday strategy webinar. Today is Tuesday, April 21st, and I'm Michael Boutros. Good to be with you guys this morning. Michael, hope all is well. Thanks, buddy. Iman, Pete, Peter, Ted, Ziad, Jay, Kelly. Great to see you guys in the room. So, what a move yesterday. Obviously, oil taking sort of the headlines across the board. Look, from a trading standpoint, there's not much to do there. We'll take a look at the levels just because it's pretty unprecedented, but we'll circle back to that towards the end. On the menu for today, DXY, Euro, Dollar Yen, Aussie Dollar, Dollar Swiss coming up on downtrend resistance, Kiwi, picture perfect this week. Hope someone caught that. Dollar CAD, breaking higher today. Gold also very clean, and SPX. Is this a break of the uptrend level that we were looking for? Any other questions or trade setups? As always, feel free to throw them on the message board. Let's jump right in. So here's what we were looking at. Well, a quick look at the DXY. There's really not much to look at, guys. Here's the weekly chart. I'm sure most of you were in the free webinar on Daily FX yesterday. Not really much to look at here. The weekly focus is going to be whether we close below or above this slope. On a daily stance, it's a mess, a clean weekly opening, a monthly opening range rather, but we're still not really much by way of my momentum, not really much by way of where you are in price in relation to the monthly range or slap in the middle. Here's what the scalp looked like, okay? We added this pitchfork in the webinar yesterday, if you guys recall. Didn't have too much conviction on it because we just haven't gotten enough plays yet. But the 38.2, that's what this slope is right here. The 38.2 of the pitchfork, decent, I guess you can call resistance, converges on the 50% at 100.63 today. So the top side exhaustion trade that we were looking for, that's now the level in focus. Okay, it's been a slow drift higher. You still don't really have strong momentum behind it, but by all means, it's not a bearish momentum profile. So not really much to look at here, but all things held constant, okay, we're looking for possible exhaustion if we spike higher towards 163. Near-term support, weekly opening range, 2019 high, 99.67. They all line up at the same spot with the lower parallel over into the close of US trade today. All right, so that's sort of your breakdown zone, if you will, confirmation of a reversal in DXY. I'm gonna run right through this real quick. There's not much to look at here. Any other questions on DXY, feel free to throw them on the message board. Otherwise, let's look at Euro. So it's been an interesting play for Euro. To be quite frank, I haven't touched it in a while. Here's what we looked like last week, guys, on the setup. This was on the 16th. Euro had just broken below this near-term ascending wedge formation, shifted the focus lower, but the first main focus of support was 108.21 to 108.31. That's still support. Okay, here's where we were when we published this on the 16th. We bobbled into it on Thursday, Friday close. Here's the open of the week. We're right back at the same levels. Now, I've been trying to give this some slope. I've been trying to look for some clarity on what kind of gradient we're working with. I came up with this earlier, but the interior lines aren't doing much, okay? It's just the extremes, so the upper parallel, lower parallel. I don't want to stress it, but if you are to take this sort of view, weekly open comes in right here. Okay, at 108.63. So if it is moving lower, something to look for in US trade today, let me bring this to a 60-minute chart, is failure right there, like into the US Open. If 108.63 holds, it's a tight move down with a break here. You're looking for 107.77, that same levels that we were looking at almost on the way up almost. And the low day close comes in right at 107.26. So it's precarious for me on euro. On the one hand, let me take a step back. On the one hand, we're constructive on the longer term picture for euro. Here's the weekly chart, right? There's assumption here, or we're trying to validate that a more significant low was registered on this massive weekly reversal and made into the close of March. Downslope support, you name it, right? So we're looking for validation of a swing low, right? How do we do that? Here's the daily chart. Here's the monthly opening right here. You plummeted, look for test of the monthly opening range high, that didn't hold. Look for test of the monthly opening range, that didn't hold, which means we're in consolidation. Momentum flatlining. Again, these are trades that are kind of the momentum just isn't there, but it's important to continue to track them and keep the levels in mind, because when they break, they're going to give you the run. So first level of significance on the upside is 108.63. Look for a reaction there. If we breach through that and you see some acceleration, 108.97, and then we'd be on to the horses. Okay, that'd be a basic opening range break at the 2019 close low. That's what's needed to shift the focus higher. Okay, but the immediate, like the thing you want to look for immediately into the US Open today is a reaction here if we get this stretch into 108.63. Questions on euro? Again, you had some sentiment survey that came out earlier today, but you're pretty limited as far as sort of any major event risk. Obviously, the coronavirus headlines will continue to take center stage. Crude will go over in a moment, but any questions here on euro? Cautiously looking for a near-term range breakout of this zone right here for guidance. Okay, it's 108.21, 108.63. Okay, that's euro. From last night's update, here's what we were looking at. So I found myself looking back into, I don't know if it was something that someone asked in the webinars or what, but there was this dollar yen setup. If you recall, back on the 16th, the thing looked unchanged into the end of the week. We're looking for a topside exhaustion if we sort of rip 108.40, 108.44, bearish invalidation. Here's what dollar yen looks like now. So we didn't even make it up there. We were looking for topside exhaustion off one of these two marks. Here's the opening range, and here's a break of near-term uptrend support. I'm inclined today to look for resistance along that slope, okay? Sort of like right here. The Friday swing high into the close was right around this region. So like 107.60s. If we fail there, you're looking for a drop towards 106.90 and 106.42. That's sort of the immediate focus heading to the US trade session today. If we get through this, I'm not necessarily bullish, but I'd be neutral. Okay, you could see some more lateral. You can ride this trend line for another couple of days. I don't even want to be involved. But the focus, if the break is real, is for failure ahead of 107.62. Okay, weekly open, or excuse me, a little bit higher. That Friday swing high. Let's call 107.66. All right, this 100 is now null and void because we've tagged or broken that low. And here's what we're looking at with dollar and yen. So the exhaustion trade is still there. I put the weekly chart on the report last night, guys. I've kind of redid the levels a little bit. If you noticed, here's what the weekly chart looked like last night. This larger pitchfork, I've kind of played around with it a little bit, adjusted the slopes and the parallels, still matches what we've been seeing in price, but keeps all this a little bit more tidy. If you look at the previous update, or I guess you'd have to go back previous two updates since I alternate, we were working with this slope on the weekly. Or maybe I just didn't want to update the weekly on this one. Oh, right here, which was taken from the actual high, not the 2016 high. But you can see the slope variant there. You had those breakouts. So basic slope kind of held closer. So if we take it back to where we are now, it's a little bit cleaner in price on the weekly. Key resistance on weekly resistance still 108.62. It's the objective yearly open. Next downside support of significance takes you to 105.20. And that's the 618 of the yearly range. So here's what it looked like last night. Okay, we were holding this ascending, could have been a bear flag formation. You're basically looking for a break below the monthly open, 107.49, to shift to the downside. So you've gotten that break. You're now looking for that break of support to test resistance. Okay, so ideally right here at the monthly open, but again, taking into account slope and time, you're looking at 107.66 is sort of your near-term bearish inval. Any questions on dollar yen? Again, I noted this yesterday, but it's important to note that a lot of these dollar majors are all trading within the confines of the monthly opening range, which means if we start to set and close below fresh weekly, monthly, okay, lows or highs for that matter, any of these trades, it would be an objective shift or objective bias into the close of the month, looking for that late month close towards the extremes, either the highs or the lows, depending on the opening range break. But for dollar yen, we've been trying to fade a rally, haven't really gotten a decent rally to either of our points of entry. So if this break is legit, look for a hold below 107.66. Oh, questions on dollar yen? Always appreciate your views on the abomination. Cheers, says Gary. Yeah, cheers. Man, I joke around and we call it names and stuff, and it typically does have like wicked price action. But I mean, when the setup and the levels are there, so you will find me. All right, that is number 3. Number 4, Aussie. Here is Aussie. So it looked like the break is legit. Remember, we were talking about this last week. We've been following this setup for a while. A major resistance zone that we were coming into in Aussie right here. For the weekly chart highlighted 64.33, 64.49. A little bit bigger on the daily and the intraday. I'll show you that in a moment. Gary says it's bitten me many times, so I always call it the abomination. Gary, you and me both, brother. It's earned its name, I think, justifiably. But for Aussie here, the big level in focus was this 64.49 level. 618 of the yearly range. You had the swing lows that you made back there in February before the ultimate break, which saw the accelerated drop. That was the only thing you wanted to highlight. Doesn't even converge on slope until like later in the month. So that was just a lateral level of focus. Pretty nice reaction, right? Aussie on the daily chart. Highlight that same region. You had 100% extent or 618, excuse me, extension from the advance off the low at 64.17. Opened up the range a little bit, but highlighted a key zone of resistance, which just happened to converge on slope as well. You got the break, close right in that range, okay, on April 14th. Quick reversal the following day and an outside day reversal took us lower, shifted the focus lower in Aussie. So to start off the week, you were looking for an exhaustion to sell. The major key support on this one is going to be 62.17 on the downside. That's 100% extension off of the decline. So if it's 2 equal legs off the high, takes you right into slope support over the next 3 days. Okay, watch that zone. Intraday looks like this. So the scalp, looked like this. We tacked on this this slope. I even told you right in the report, I have no confidence in this slope yet, but if price is heading lower, look for failure head of 63.75. You didn't even get another really attempt at that. It kind of bobbled higher, but 63.50s was pretty much as high as it got. Taking out 63.15, first target, second target here is 62.64. We're right on tap. That's just the swing low that you made on the April 16th drop. So, you know, the break of the ascending formation that we were following for so many weeks wasn't really clean, right? I hate when these things happen, but you just got to wait them out sometimes. There was the break. Look, you know, common sense technical analysis says break of support, look for resistance on the upslope there. Look like it might have started, failed again. Look like it might reverse failed again. Once we tacked on that new sort of exhaustion high on divergence yesterday, I think it was a really nice tell. So that was the first level I was worried about. We've made it through that, scratched that at this point. You're looking for resistance, or I guess, I mean, I don't want to call it bearish invalidation, but key resistance at this point on the near term front would be right here at that opening range low, 63.36. Bearish inval still 63.75 now. So you drop that from 64.48. Downside target 62.63, big zone. And again, 100 off the high. Remember where it converged on the daily chart? Upslope support. Look where it converges on the intraday chart. Down slope support. So both of these charts in time reflect 62.17 as sort of a key area to look for if we continue to move lower here on Aussie. Questions on Aussie dollar? All right. That is number 4. All right, yeah. So if you're holding shorts here on Aussie, look to clean a little off the table at 62.64. Look for a reaction there. Next downside target, like I said, 62.17. Swissy. So I like the levels, but I haven't necessarily gotten a play on this. I showed you this guys yesterday as well, but I thought it was worth revisiting last night as we were continuing to coil into a tight weekly opening range. Look, this monthly, multi-month consolidation off of the March high is still for me kind of shaky, right? I really hate these really steep consolidations. Don't tend to give you really clean breaks. Here's the first attempt here. You should see acceleration if this is going to break. But the point being the near-term focus, which is this. If this downslope is in play, the weekly or Friday's high rather at 97.25 converges on slope resistance, that really should hold. Okay, here's what it looks like now. So the only play for me on this one is if we are heading lower, you want to kind of see that Friday high hold. Try to say that 3 times. 97.25. If you get the upside stretch, you're basically risking 97.50. Don't have a play on it. And one other thing, if this is kind of the first leg of a larger move higher, just to show you what the risk is we're talking about. So essentially there's a lot of room if this thing is still heading higher. For me, I just want to watch for the reaction at 97.25 to in US trade, see what happens there. Again, for all intents and purposes, these things are range bound. Look at the momentum profile since the break above the 2020 open, right? Looks still constructive. Now we're failing at 60. Kind of range bound. Range is the name of the game. So don't get too faked out here. At the end of the day, if we kind of peak, you have a weekly opening range, excuse me, in play just below resistance. So another one is kind of wait and see. We were looking for the stretch higher and failure. We're getting the stretch. Let's see if we get failure. Any questions on Swissy? That is number 5. All right. Kiwi, the cleanest of them all this week. It's funny because I kind of got off Kiwi for a while. If you guys remember, there was like a couple of weeks I didn't talk about Kiwi or Aussie for that matter. They were kind of out of favor, but starting the beginning of the month, or the beginning of the week rather, this thing looks pretty clean. Here's the daily chart. You basically reversed off of a multi-month, I guess almost year, but multi-month trend resistance. Okay, former support, bounce, saw the origin of the breakdown. We failed. Yeah, we did find one daily close above, but here's the pullback. Again, stretching into it, right? You got the 50% retracement of the yearly range at 61.12. It's basically what caught the highs almost there last week. So on the stretch, looking for that sort of failure play. Here's what it'll look like on the near-term slope. Upper parallel converged on a 786 near 60.85. That was our zone. Near-term resistance 60.50. So we got a little bit of a bump here, poked right into here, and then tanked. Super clean. Okay. Here's a side by side. Here's the 240 or 120, I guess. Right, just super, super clean. So a little bit of a hesitation at the 618. There was a 786 tap. Failure, breaking the lows, you break the 38.2, you break the monthly open, you're now looking for 59.28. Okay, this is sort of your first area. If you're holding any shorts at this point, you want to do something else here, maybe take a little off, at least break your bring your stops to break even or better. Next downside break, you're looking for 58.78, and that's a basic 38.2 of the advance, nothing special. Converges on slope though, heading into tomorrow. So we shall see how clean this continues to play. You know, Kiwi's notorious. It'll just start going into a range all of a sudden after like making really, really clean moves. So, you know, take note of that. But oh, 38.2 right there too at 58.83, even better. I mean, 100 converges on the 38.2 there rather. That brings in the time to tomorrow in US trade. And weekly open resistance 60.28. Super clean. One of our cleanest moves this week. Any questions on Kiwi? Do not chase. If anyone sees this move right now and they didn't get a chance to get into this yesterday, do not chase. As far as like re-entry at this point, I mean, it'd have to be a pretty decent recovery. Look, if it gets down into this, it depends where the recovery happens. Let me just double back real quick. If we get into 2006 low and it bounces, your ideal situation fails at that parallel and then moves lower again. So you would take a high against the Asia low basically, or the Asia high rather. But that's like a real tight play. Ideally, I mean, you'd have to be able to put a stop against the weekly open with comfort. So you kind of might be out of the woods on this one if you even already gotten into it. Look for reaction. If you're looking for a new setup on this, look for reaction near 58, 78, 58, 80s if we get down there. Do not chase. All right, that is Kiwi, our favorite of the lot today. Dollar CAD. I guess no surprise. I was talking in the webinar yesterday how I kind of want to see this thing fail, but it's really hard to justify any type of CAD long position as you see crude and free fall. Now that was before crude went into negative territory and plummeted on the May contract, but or the April contract rather, but yeah, it was pretty tough. So look, here's what dollar CAD looked like last night. We were trading, or this was on the 19th. We were trading just above confluence support. There was a 618 retracement at 39.80. The lower parallel for the upslope was there. We literally gapped higher, and it's been a one-way trade ever since. I got a little gyration here, but you've now paired 50% of the decline off the highs that you made in March. Wouldn't want to try to get. Let me take a step back. I still want to see failure, but I think you got a little bit higher to go before you look for that. Okay, you guys know my favorite Fibonacci sequences and convergences are always going to be the 1618 or the 61800 convergence. So if we don't take into account just that Friday gap low, the open, okay, the 100 goes right into a range we've been watching anyway for months. 43.36 into 43.57. Again, the 57 part, that's the 618 of the recent drop. So this is more recent, but the high week close, right? Converges on upslope resistance. So right now, heading into the US trade session to open trade, yeah, you're opening into resistance on dollar CAD right here, 42.60, but it's still constructive while above the median line. So I really wouldn't get comfortable on the short side unless we get into 43.50s. I'd love to find some exhaustion here. Otherwise, we'd need to say a break basically below the monthly open to get bearish on this again. I've had sort of my fill over the last couple of years trying to fight dollar CAD moves. They tend just to stick and go. So don't have anything on the long side right now. Next upside levels, 42.61 and 43.50s is really the big zone of resistance you want to pay more attention to if we get it. Hey Gary, I just saw this. I'm sorry. It says I'm in Kiwi at the moment. I'm in Kiwi. Move at 60.32. Where would you recommend I put my stop loss? Aussie, Kiwi, right? 60.32. Nice entry. So here's the thing. It depends how, excuse me, Gary. Depends how aggressive you want to play it. Lose my voice. So for me, and I can only tell you what I would do. If I had a position on like this, I'd be scaling off at 59.28 if we get it. I take a little off the table. If my entry was 60.32, yeah, I'd have a stop into that drop. I'd have a stop at the weekly open. You know, buckle in, I don't know, a couple of pips of profit. If once we get through this low, you can bring your stop down to the Asia high, okay, that you made last night, right at the 60 handle essentially. If you break this low and are, let me say this, if we make it through this low into 55, the 80 zone, you'd have to keep it above the April open at 59.60. Because you would want to see resistance there. Maybe a couple pips higher, give yourself a little bit of a plan. But that's just, Gary, how I would do it. Can't tell you exactly, you know, what your risk tolerance is or how to exactly navigate it on your setup, but that's how I do. I love phasing out through the levels and just bringing stops in. Usually I'll leave a little on the table once we come to a big level with the stop well in the money, just because if that break happens, I want to have a little bit on the little change on that, right? The breakdown from 58.80s would take you down to 57.80. It's another 100 pips before you hit the 618 and the next major pivot in price. So I'm a big fan of the scaling out. Hope that helps. Cool. Many thanks for that. Sorry about the bad timing. I was rushing. Hey, no worries, Gary. No worries, sir. Hope that helps. And nice entry. Nice entry. If it holds at 59.28, get defensive because that's just, you know, you're basically checking like your range lows. But ultimately, this is the bigger support where you'd want to take a little more off the table and you'd want to get a lot more protective on that stop. Well played. That's number 6. Oh, and we did CAD number 7, gold number 8. Where are my gold traders? Here's what's going on with gold. Finally getting the pullback. People hate on me whenever I get bearish gold. I don't understand it. There's like bulls out there that just don't want to ever hear anyone say anything bad about gold. But man, what a level to turn back from. Here's gold. I'll remind you real quick, guys, on the weekly chart. 1733 was such a magnificent level. 786 retracement, the entire decline off the record highs. You had the upper median line parallel for a multi-year slope we've been following. Beautiful reaction, and we closed above, I call it near term here on this monthly chart, on this weekly chart rather, but it's a yearly trend resistance. Again, look at it close. Don't trust me for anything. That's what it looks like, right? And it's just super clean. It's just super clean. So if there's going to be a pullback, this is the spot to look. And even on the intraday spike, making it all the way up here was even better. So yeah, I still think the risk is still for a little bit of a setback. Now we're coming into some levels of interest of which you want to start to curb that appetite. Here's, before I get into this, here's gold on the daily chart, right? So on a, you know, real, again, near-term basis, just off last month's low, you had this 3-point touch. Looked like we had a nice break early in the week. Here's the decline. Here's the high day close from March being broken today. By my estimation excuse me, on the daily chart, your next major focus isn't down to like 1633. Maybe that's being a little over aggressive, but um, that would be sort of the sweet, move. Sorry, guys, still dealing with a bad back here. 1633 still going to be the level to sort of look for on the test on the daily chart. On the intraday, okay, right ahead of that, it's starting to become a slope. So even into yesterday, when I published this chart, or what was this, 19th, day before yesterday, it looked like time value of the slope converged right there. Kind of a little bit behind now. So just ahead of 1633. Just want to warn you, look, you could get a play off that slope. That's like 1644. It's like $10 higher, but look for a reaction there. Look for a reaction there. Below 1633, and you're looking for 1570. That's just would be the play for me. The whole range is 1565 and 1585, but 1574 is basically the objective monthly open. So all this you've seen, we haven't even paired 50% of the monthly range yet, let alone a 38.2 from the rally off the March low. So yeah, clean levels in gold. Any questions here on gold? I am here, but no luck lately. So give it a time to swallow. Says he man, he just got in, catching up. 1643 was catching the close. Oh, back. What are you talking about back here? Yeah, not bad. Not a bad observation there, Eman. Yeah, that's actually the low close they made for that doji looking candle almost back in on April 8th. Right there. Not bad. Good zone to watch. Saru, can we look at silver also? Yeah, sure. While we're at it in the commodities, right? Number 9, let's take a quick look at silver. Honestly, I haven't taken a look at silver in a long time. Well, I shouldn't say that, not a long time. It's been a couple of weeks. So bear with me. Let's bring up the chart and see what's popping off here. Okay, so it's a long-standing pitchfork off 2016, 2019 highs. We turned right ahead of pitch support. Oh, that brings it in. Okay, so bring that to the November 2018 low. This is your yearly open. Here's the break in February. Take a retracement of the yearly range. Monthly open support comes right here. All right, so on the daily chart, the money move would have been a rally into this zone and then the reversal. but it is looking pretty heavy. And let me just take into consideration one more measurement here. All right. Not really a fan of using older fibs like this to this degree once we've passed through them as support and resistance, but both of them have been decent pivot points, including the 100, which we just came off of at 1582. Looks to me like you're coming off of downtrend resistance, and the momentum profile also reflects sort of a bearish move here, right? The entire ascent into the highs here, you're holding support right around that 60 level. You broke below that. You had this break in overbought, which is not really what you want to see, but here's the deep overdrive signal, and then here's the failure at 60. So I would actually be in the mindset of selling rallies here, targeting 1423 and 1389. Where's the 100%? Yeah, amen. Where is the 100% comes from the gold, from the late 1749? Thanks, Mike. On the hourly, gold. This 100? Yeah, this is the daily. This 100 is off the low. It's your first leg up from the 2015 low. You could see it was such a huge pivot. We didn't do anything on the way up, so we really didn't know if it was major, but we blasted through. It was the origin of the breakout, then was perfect support, and even here, perfect support. Does that help you, man? So Sarub, on silver, any questions here? We'd have to look in deeper and see if there's a actual near-term setup, which I don't necessarily see here. Let me take the 240. Yeah, there's no slope for me to work with here. All I do know is that I would want to be looking for some sort of effective downslope, which is going to be hard to get with what price action is just doing. Look at something like that. Yeah. You're heading into laterals, just a lateral level that we were watching for a while. It's the June open, but you can see the pivot that we've seen in near-term price here. The real drive would be into 1423, and you'd look for a reaction there for a toe. Hope that helps, Sarub. Silver, maybe we start tracking this a little bit more often, but I'm typically not a big fan of or I can let me take that back. That's not that I'm a big fan. I just haven't traded as much, to be quite honest. Sarub says, thanks, right on. Same to you, man. All right. Last but not least, SPX. I see all my Pete's in the room today, and Peter's here too. Looks like a break to me, guys. Looks pretty damn clean. So the daily chart for SPX, we went over this. Real quick update on this. The big level of resistance never got tagged, okay? And the big region we were looking for a short off of was 28.95 into 29.32. It was a bigger zone, but man, we just came and scratched just pips ahead. We can't rule out a test of it. Markets are on the skits. This thing could rip, and even if it does over the next few days, that would converge on former slope support turned resistance. So it's still going to be your key resistance zone, 28.95, 29.32. It's 100 off the low and 618 off the yearly high. So that's still key resistance. Nothing changes there. But if this materializes, we haven't gone a daily close yet, but looks pretty clean. I'll show you the intraday chart in a moment. You're basically looking lower, well below the weekly open. Here's what it looks like on the intraday chart. And here's what SPX looked like as we started the week. All right, so the upslope, you had basically that same zone we were looking for in resistance. It went for another kind of kiss, almost tried to touch it, didn't. We were talking about this yesterday in the webinar. We were right here. It was rallying off of slope support. And there's a lot of pushback whenever you get bearish on a rally like this, and guys are starting to really get bullish again. So I even presented this. I was like, look, there's even a sliding parallel here. If you want to take the more conservative approach, that would still need to see the break. Sometimes you don't want to see a wick like that, think it's breaking, and then all of a sudden you get faked out. But even that's looking good. So look, your first pivot, your first level that we were citing since the start of the week is right here at 27.54. Look for reaction to the start of US trade. If you get a bobble or a bounce again, you want to see resistance ahead of former slope support now. Okay, 28.55 is going to be our near-term bearish inval at this point. And if we break lower from here, yeah, I think you do see 26.42 again. Now, having said that, right, you take a basic retracement. You don't want to just look for levels that have necessarily been pivots, but you want to find some further evidence in price. And if we take a quick retracement, again, assuming that this break is going to come off below 27.54, a 38.2 gives you 26.20. So yeah, I'd rather have an inside target, been a decent pivot in price, was the March range highs. Look for 26.42 here if we get lower. Resistance 28.55. The only thing that you put you back in resumption mode, like straight up, is a breach above this key zone. 618 off the high, 100 off the low. My favorite setups happens also to be the 2018 high day close, 29.29. It's a big zone. All right, that's your like sort of resumption breakout if you get it. All things held constant, still banking on a hold below 28.55 to see if we can get a tag lower, your 26.40s. Now, ideally, also, you'd look for some slope on the decline to give you some guidance. I was trying to fiddle with this earlier today. You can make the argument that this is sort of what to watch. Maybe you scratch the 50 line here. Sometimes you got to finesse a little bit, but basically would put us into this key zone like a little bit further out in the week. But you get the picture. There's not much conviction on this slope yet, but you look for the slope to verify levels that you're looking at. The October low, which we just cited, was our near-term bearish inval, comes in right above that upper parallel. So sure, willing to work with this for now and see how it pans out. 28.55, want to see a hold below that. Any questions on SPX? All right, Dow, please. Sarub, yes. Dow, US 30. Let's see what that sucker is doing. Same deal. Oh man, I completely forgot we put this together. Sarub, you're the same one that is in our Daily FX webinar, right? Yeah. Man, look at this thing. Look at this thing. Not as clean in that it didn't get quite as close to the resistance zone that we were looking for, namely the June open / low day close at 24.97. Excuse me, 24,795. Didn't quite get there, right? But the divergence was just like ongoing. And here's the break. So yes, I do like this lower. You can try to tack on a downslope here of this sort and see if it kind of pans out. Same type of deal. This even looks cleaner. You know what? Drop that 50. It's your bearish inval. It's your first major key support zone. I stand corrected. Hold on one second. Okay, choke up that 38 too. We were looking at that from last week's high. We made a new high, right? So yeah, not bad. Let's see what this looks like. Might be the better slope to look at on this decline, Sarub. So you're looking at the high, low, high from April 9th, 13th, and then the 16th. And that actually kicks that out in time, gives us a little bit more allowance. Yeah, not bad. I'd work with that instead. You've seen some pivots along the 75% line. That puts the 25% line just lower into US trade. And then again, 22,537 would be a nice pivot zone for initial support. Sarup says yes. All right. Yeah, keep asking about this because I don't actually follow intraday technicals in the Dow just as quietly as often, but always down for a challenge. And that brings us to the close, guys. If there are any other questions, trade setups, feel free to throw them on the message board now. Otherwise, we'll go ahead and wrap things up. Event risk is pretty light over the next couple of days, so keep your eyes. Obviously, again, this Corona thing is going to come out of the woodworks. Oh, crude, Pete, where's my head? Quick note on crude. Uh, uh, what do you guys want to talk about? How to interpret this list. Listen, I posted this chart yesterday. This is the daily chart that we've been following. Forget this. This is the weekly chart that we've been following. Now, this is of US oil. Okay, guys, that's the CFD. It's typically in line with the uh, front month contract. You can see here it reflected that drop into basically zero yesterday, but didn't reflect the negative drop, which was in the current front month, which if you always want to see it, guys, on TradingView, it's CL1 exclamation point. It's going to give you the front month contract. This is what we saw yesterday, right? So we've actually seen a pretty, I'm sorry, this is the weekly chart. So we've actually seen a huge recovery from those lows. But that ends, delivery of this comes tomorrow in the real sense for futures traders, but the contract for all intents and purposes ended yesterday. Technically, you can still trade it, but on most futures platforms, CFD platforms, all of that, we're now looking at the June contract, right? So that's dropping too, which is the interesting part. Let me bring this into a daily chart. That's dropping too. So you saw yesterday that we gapped higher into the open today. And now it's dropping again. So the point being, the negative price print and all that, yeah, that's more of a trading phenomena. It has large scale implications, obviously, for price. It's not bullish. But it just goes to show you the predicament that markets are in. Essentially, guys, this is a sheer storage capacity problem. Okay. I don't think anyone's going to say no. Don't give me $30 and a barrel of crude. But there's simply the capacity to hold is really what you're running at, especially when you're looking at WTI, guys, West Texas. I mean, that's also in that region specifically. There is already capacity has been filled, or they're at capacity. So literally, it's a storage type of thing. You hear, I mean, of course, I'm in the loop here in the city, but you hear all these traders, everyone talking about fill up your pools and all this, and I even got some emails from some traders. They were showing me you could rent uh, oil tankers, trucks, tr oil trucks, excuse me, for like $1,500 a month. Go fill it off, top it off, park it somewhere, wait till markets recover. That's the kind of jokes that were going around the city yesterday, but it's real, right? It's real. And the implications for the energy market are real. Um, from a trading practical standpoint, guys, there's nothing to do here. You're sheerly gambling. You're sheerly gambling, right? People last week who were getting long on the fact that, there's been an agreement with Saudi and Russia. Yeah, that's all good and dandy, right? Um, the damage was already done from a technical standpoint, in my opinion. So look, this is zero. We've bubbled along the bottom. The CFD now starts to take into account front month contract, which moves over, rolls over to next month. So start to pay attention to this even more so tomorrow, okay? Because the contract actually ends. The May contract actually ends. That's today for settlement. So we'll start paying attention to this into the close of the week more. But there's really nothing to do here, guys, from a practical standpoint. I just wanted to go over this just to show you guys because I thought in the webinar yesterday we were going into 10:30 and I was like, hey, look for a level there, guys. If there's anything going to happen, it's going to happen there. If that breaks, you're looking at like $4. I was way out of the realm. This thing went straight into negative $38. So glad the thought of buying at 10 was just that, a thought, right, Mike? Yeah, very interesting to watch the historical move yesterday. Absolutely. And they're going to be writing history books about this, guys. You'll see. So being in the driver's seat, kind of navigating through this and saying I lived through it is always a good thing. We said the same thing in 2007. This is obviously not the same type of event, but the fact that this is happening in this time period of extreme market turmoil and massive, unprecedented global demand destruction, right? You've seen demand for crude drop off everywhere. It wasn't localized in New York and New Jersey or even one country. It was a global demand destruction on top of what was seemingly a pretty far out price war between Russia and um, and Saudi. Look, it was just a brew for disaster. I think we've seen the results of this. I don't think anyone could have called a negative print of $38. Even the funny thing is when it was dropping into $3, I was on a round table with a couple of guys in the city and I was just joking, being like, this thing's definitely going negative, just based on what I was seeing in momentum. Not really thinking that that was actually going to be the case and not thinking that would go into a negative 38 print. So certainly history in the making, something to watch, not to trade, not something to put your bucks on and your actual hard-earned money in. But I do think we will see an opportunity pretty close buy in crude over the next few weeks. I just don't think after a move like that, guys, you want to get involved in a trade like this with any type of responsible or respectable risk management. All right, so I'll leave that there. Mike, or who's that? Pete, thanks for reminding me. Guys, have a great week trading. I'll see you on Thursday morning. Till then, best of luck. Cheers.